Hey guys, welcome back. My name is Sam. I am a real estate agent in the central North Carolina area. If you're watching this video, chances are you probably just went under contract on a new house. So first of all, congratulations. But you're probably also wondering what happens now. So this video is going to be a full timeline of everything that happens after you go under contract on a new house. All right, so the first thing that happens is the delivery of both of the deposit checks. So the due diligence and the earnest money. The due diligence is going to go straight to the seller. They're going to deposit into their account immediately, and you're going to lose that money until you close on the house. The earnest money is going to go straight to the attorney's office to hold until your inspection period is over. All right, so all of that's going to take place in the first 24 hours. The earnest money, you have up to 3 days to deliver it, but it usually gets done in the first 24 hours. So the next thing we're going to do is go ahead and schedule our inspections. If you're buying a new construction house, this is going to look a little bit different, depending mostly on what stage of the process the new construction is. Are you buying a spec house, which means it's already built? Or are you buying a pre-sale lot that's going to be built in the future? If it's a pre-sale lot, the first inspection that's going to come up is going to be a pre-drywall inspection. It's just going to inspect the house before any drywall goes up to make sure everything is set up correctly and installed correctly. And that's going to be the first inspection that you can do, the pre-drywall inspection. That's only for new construction. Everything else is going to be across the board for any home that you buy. So if we go down the list, it's going to be a home inspection. You can get a pest inspection. You can get a radon inspection. We have radon in North Carolina. That's not really an issue in other areas, but we do have that here. You can get a septic inspection if the home is on a septic tank. And lastly, you can get a well inspection if the home is on a well. Now, if you have any hyper-specific inspections you want to get done, you can also get those done, but those are the most common. All right, so on this inspection report, you're going to hire an inspector to go in there and basically tell you everything that's wrong with the house that you are getting ready to buy. This can be a little overwhelming at first, but just know that they are trying to look out for your best interest. So they're just trying to look for any defect at all. Some of them may not be a real issue, but they just want to let you know of everything that is going on in your house. Once you get these inspections done, you're going to meet with your realtor, figure out what you want to ask the sellers to fix. And that's going to be organized in a repair request form. And if you're in a new construction, it's going to be basically the same process. You're just going to fill out that form and hand it over to the builder. Typically, you're going to give them the inspection report as well. For existing homes, you're just going to give that to the seller, and it's more of a request in that aspect. You're going to ask them to repair things, and they have the choice whether or not they actually want to do anything. And this is where the realtor is going to negotiate back and forth what repairs really need to be done and what you can get the sellers to actually do. If you're the seller, it's going to happen in the reverse. And during this time frame before the due diligence period ends, you're also going to get an appraisal done on the property. The appraisal is going to come from whoever is giving you the mortgage. If you're buying it in cash, you don't have to worry about this at all. But the appraisal is basically going to inspect the home, and they are going to give a valuation on the home of what they think it's worth, and they're going to give that to the bank. And the bank is going to lend you money based on the number that the appraiser gives them. So for instance, if you bought a home at $450,000, let's say the purchase price on the contract was $450,000, and you got the appraisal done, and the appraisal came back and the guy said, hey, it's only worth $445,000. Well, in that case, they're only going to give you a loan on the value of the home being $445,000. So you need to basically come up with that extra $5,000 in cash at closing. And during this process, the lender is going to work with you and get a whole bunch of additional information, documents, all that stuff. They're going to push it through underwriting and make sure the loan gets full approval. All right, so once we've done all that, we've sent our repair request off to the sellers. They've accepted it, or they've changed some things, you've negotiated, and you're moving on. You're going past the due diligence period. Now, at this time, it means your earnest money that you deposited to the attorney is going to be fully owed to the seller. So if you were to back out after this point, you are going to owe the seller that money now. And from here, there's not much you're going to do from a buyer side until you close. From a seller side, you're getting those repairs done and following up with the buyer to let them know that they have done the repairs. But from a buyer's perspective, you're not really doing anything during this period. It's usually about 2 to 3 weeks. You're just kind of waiting. And as we get closer to closing, you're going to activate your home insurance, all the utilities, get all that set up for the closing date. And as we get closer and closer to the closing date, let's say we're about 2 to 3 days out, maybe closer, you'll get the preliminary closing disclosure from your lender, which basically just goes over your final cost, what you're gonna owe once you get to closing. And once you have that number, you're gonna go ahead and set up a wire transfer to the attorney to pay for the closing. Again, if you're paying cash, you're not gonna get any CDs, nothing like that. It's going to be a lot more straightforward. You'll just get the disclosure from from the attorney that tells you exactly what you owe. And if you're a seller at this point, you're going to meet with the attorney before closing, usually, and you're going to sign all the documents that you need to sign. And usually, sometimes the day of closing or a day before closing, if you're a buyer, you're going to schedule your final walkthrough, which just means you're going to walk through the home with your attorney, make sure all those repairs that you agreed on have been done. If they haven't, then there needs to be some further negotiation. We may need to push closing back. By law, you can technically move the closing up to 7 days without penalty. And by penalty, I mean breaching the contract. You can move the closing up to 7 days without breaching the contract. All right, so the final walkthrough is done and you are set to go. You're gonna go to closing at the time and date scheduled, and you're going to sign all of the documents. It usually takes about 30 to 45 minutes. And you are going to collect your keys and you've done it. So after you sign all the documents and you've closed, you still have to wait for the attorney to put the sale on record. So that means you legally own the home. So you're gonna wait, it usually takes a couple hours. The attorney will email you, let you know that that's done, and you can officially move into the house and the house is yours. So congratulations, you've officially closed on your new house. Or if you're a seller, you've officially sold your house. So thank you for watching. I hope you learned something and I will see you in the next video.